Hello, I'm Jed Wonderly with the Wonderly team at Noble Home Loans, and this is the first video in a series of videos that I'm going to be producing about how to avoid the most common and costly mistakes made when getting a mortgage. Now, some of these mistakes are going to be money-based. They're going to cost you money either now or over time. And some of the other mistakes might either cost you time in terms of the mortgage, which may end up costing you your home if you don't close by the close of escrow date, and it may even cost you not getting the home that you want if you don't have proper approvals up front. So it's going to be a number of videos in this series, probably 6 to 8 videos would be my guess, and the videos are all going to be hopefully about 3 to 5 minutes, so they're nice and short and sweet. Another thing I'm going to do, I want you to note that down below you're going to see a link that will be to my Facebook page, the Wonderly Team Facebook page. And what that's going to do is, if you're in the process of getting a loan, whether with me or anybody else, you can go to that page, and about every day, I miss a few days here and there, but about every day I write a little piece about what's happening in the economy and how that's influencing the mortgage bond market and what the mortgage bond market's doing in the benchmark bond, which is really what drives interest rates. So I highly recommend going to that page and liking that page so that you can get a better idea of whether or not you should lock and when you should lock and that type of thing. Now, a lot of loan officers do not have access to the live mortgage bond market, and a number of others, whether or not they have access to that, don't understand the economy and what really drives interest rates and such. And so I recommend that you do subscribe to that, or like my page, I should say, because you know, this is something I've studied for quite a while, and of course learned a lot about in business school many moons ago. So I hope you enjoy this series. I hope you learn a lot from it. We're going to talk about a lot of things, such as, you know, whether to go with a 30-year fixed or a 15-year fixed. We're going to talk about, you know, ARMs versus fixed. We're going to talk about when you should lock. Should you go with a higher interest rate so that the lender can help offset some of your fees, or should you go with the lowest possible interest rate and buy it down? We're also going to talk about things like time value of money, opportunity costs, and things like that. As a certified mortgage planner and not just a loan officer, my goal is to help you pick the right mortgage and use the right strategies to help you prepare for retirement. Your mortgage is probably going to be your biggest debt, biggest single debt, and your house is probably going to be your biggest single asset. And because of that, it's very important that you make the right choices with regard to how you finance it and how you pay it off, so that you can maximize the amount of wealth you're able to create relative to your retirement goals. And of course, retirement goals are very individualistic, very much something that needs to be discussed between a certified mortgage planner and a financial planner and other financial experts and yourself, so that you can make the right choices and help you achieve your goals. You know, everybody has a different timeline for when they want to retire, where they are right now, both in terms of how much wealth they've created as well as, you know, what their age is and that type of thing. So very important that you address all those issues before you make any solid choices with regard to your mortgage, so that you don't look back and say, man, I wish I had done this or that or whatever, you know, your other choices were. So I hope that you get a lot out of this, and you know, if you have any questions, or if I can help you with a pre-approval, please call me at 702-812-1214. That's 702-812-1214. Now, one final comment I'll make on the pre-approval is that it is extremely important in today's market to get a very solid pre-approval. And when I say solid, I mean that you've provided your income and asset documentation. That's tax returns, W-2s, most recent 30 days of pay stubs, most recent 2 months bank statements. All that kind of documentation that's going to, and in some cases a little bit of other documentation, that's going to allow your loan officer, hopefully me, to be able to provide your real estate agent, your realtor, with a great approval so that the sellers are confident that you're going to be able to perform, and if they're confident, you're more likely to get the contract and the bid, especially when there's obviously more than one offer. So go in strong, have a good solid approval, make a respectable offer, and of course respectable is going to be determined by you and your realtor for any given home, which depends on how long it's been on the market, what the inventory is out there, things like that. But having a solid pre-approval is going to be a huge asset to you, and you want to get that done before you go do any shopping, because your realtor is going to want it before they make any offers. So I hope you enjoy the series, and I hope you get a lot of great information out of it. That's certainly my goal. And again, if I can help you in any way, please call me at 702-812-1214. That's 702-812-1214. Thanks, and make today great. Take care now. Bye-bye.